Welcome to The Explainer. Today, we're going to talk about something that trips up so many home buyers, that huge and sometimes costly difference between the credit score you see on your phone and the one your lender actually uses to approve your mortgage. So, let's just dive right in. You've been doing everything right. You're tracking your credit score on an app, you feel good, you're ready to buy a home. But is that number you're watching every week the one that truly matters? Well, here's the kicker. Probably not. And we're about to find out exactly why. I want you to picture this, because it happens every single day. You walk into a lender's office, super proud of that 720 score you've been working on, only to have them tell you their system shows a 670. And bam, that 50-point drop isn't just a surprise, it can feel like a gut punch. Let's break down why this gap exists and what it really means for you. Okay, so first, let's get one thing straight. The score you see on those popular apps, it's not wrong. It's just, well, it's the wrong tool for this particular job. It's not designed for what's probably going to be the biggest purchase of your entire life.
The difference we're talking about here between that consumer score and your real mortgage score is often anywhere from 10 to 50 points, sometimes even more. And look, this isn't just about bragging rights. A gap that big can literally be the difference between getting approved or getting denied for your dream home.
So why in the world is there such a huge difference? It's because when it comes to credit scores, you, the consumer, and the mortgage lender, you're basically living in two totally separate scoring universes. You're speaking different languages.
Think of it like this. On one side, you've got your free apps like Credit Karma. They mostly use something called Vantage Score, and it's great. It's like a bathroom scale, perfect for a quick general check-in on your financial health. But on the other side, you've got mortgage lenders. They only use specific FICO score models. They're not doing a quick check-in. They're doing a deep dive risk analysis. So here's the bottom line on that Vantage score. It's an educational tool, period. The credit bureaus created it to give you a ballpark idea of where you stand. It's helpful for that. But when it comes time to actually get a mortgage, it's just not in the game. It's not the score that's going to get you the keys to a new house. All right, let's pull back the curtain, shall we? Let's get right inside the lender's playbook, because this is the information that really, really matters when you're trying to buy a home.
Now, this is so important. Lenders aren't even using the common FICO scores you might see for a credit card or a car loan, like FICO 8 or 9. Nope, they are required, like mandated by the giants of the mortgage world, Fannie Mae and Freddie Mac, to use what are often called the classic FICO models. And yeah, they're older. And here they are, the exact models. Lenders pull what's called a tri-merge credit report. That means they get three specific numbers: FICO Score 2 from Experian, FICO Score 5 from Equifax, and FICO Score 4 from TransUnion. You gotta know, these older models are way more sensitive to things like collections or even just opening a new store credit card. That's often why the score comes in lower. So what do they do with these three different scores? It's actually kind of funny. They don't average them. They don't pick the highest one to be nice. Nope. They use a simple process called the middle score rule. They just line them up from lowest to highest, and they pluck out the one right in the middle. So if you've got a 680, a 700, and a 720, your qualifying score for that mortgage is 700. That single number is everything. Okay, so you get the problem now, you know why it happens. Let's talk about the solution. How do you get ahead of this and walk into that lender's office with total confidence, knowing there won't be any last-minute surprises? Don't just take it from me. Listen to a real pro. Joel Lobb, a mortgage officer in Kentucky who's helped over 1,300 families buy a house, he puts it bluntly. He says the score from your app just won't cut it. He says they have to pull those FICO 2, 4, and 5 scores to get you approved. It's simply non-negotiable. And knowing these benchmarks it's absolutely crucial. Now, every lender is a little different, but generally speaking, you're going to need a middle FICO score of at least 580 for an FHA loan. And for VA, USDA, or a conventional loan, the bar is usually higher, around 620 or more. That's the target you should be shooting for. All right, so let's wrap all this up. What's the takeaway here? First, keep using those free apps. They're great for general monitoring, but just remember, lenders are playing a completely different game. They're using FICO 2, 4, and 5. If you really want to know your number ahead of time, you can check it out on a site like myfico.com. But honestly, the most powerful thing you can do is talk to a lender early, way early in the process. That's how you avoid all the surprises. So I'll just leave you with this question. For what is probably the biggest financial decision of your life, are you absolutely sure you're looking at the right numbers?
Being prepared with the right information is the first step to confidently buying your new home. Don't let a score surprise derail your dream.